Welcome everyone. Tonight we are talking about the ultimate guide to grants and schemes for first home buyers. And I am really excited to help first home buyers because this could be make or break for you in your property experience for life. If you get it wrong the first time, it really does cloud how you act later on. So my name's Louise Lucas. I'm CEO of the Property Education Company, and I love sharing my knowledge because I've learned it the hard way and I want to help people avoid those mistakes. You can avoid spending and wasting hundreds of thousands of dollars if you get this right. So it's really important. We at the Property Education Company do loans and assist people with education because that's what we love to do. And we've won many awards as brokers, National Mortgage Broker of the Year and Customer Service Awards mainly, because we are really keen on helping people the right way. Just note that anything I say in the webinar is for general information. We'd love to help you individually. You just need to ask us and we'll happily assess your own situation. And I'm going to go through this fairly quickly and then you can ask any questions. So just let me know if you've got any questions, but these are the things that I'll be going through. So which grants apply to first home buyers and how it works? Know what to ask your parents. What deposits do you need? Frequent mistakes made by first home buyers and some emerging trends. And I hope you find these very useful because thousands of people have made mistakes, so you don't have to. Knowledge is power, never forget that. So I want to talk to you first up about the story about two Nicks. So first Nick bought in Sydney. He had a $30,000 deposit. He was lucky to find a 2-bedroom unit. It was 20 minutes outside of the city in Ashfield, and it cost him $62,500, I recall. And because he took advantage of not only having a small deposit, he had no stamp duty, and secondly, he was able to take advantage of the federal government scheme for not paying lenders mortgage insurance. So he was able to borrow up to 95% of the value of the property in the first 12 months. And the conditions of that are that you have to earn as a single under 125,000 per annum, or as a couple 200,000. And he was able to borrow up the 95%, just use his 30,000 to get in. And then he, over the course of 12 months, managed to renovate the property. He did a great job, new kitchen, new bathroom, floors, painting, did a lot of the work himself. And it was revalued at $750,000 after 12 months. So that's pretty extraordinary. And then he was able to rent the property out and release himself from that federal government scheme. So he did incredibly well. Another Nick in Victoria, this time bought a house in, I think it was Pakenham, could be wrong, but I'm pretty sure that was it. He got a property. He was able to take advantage of 3 great offers for first home buyers. The first one was the no stamp duty because he bought under 500,000 actually. The second one was he didn't have to pay lender's mortgage insurance, so he only put in 5% deposit, which was very little. And the third thing he got to take advantage of was he got a $10,000 first home buyers grant from the state government. Now, how did he qualify for that? The property had never been sold to someone else. So the people who actually built it sold it to him. So in that case, it qualified as a new property, even though someone had actually owned the property and lived in it, but they had been there under 5 years. So this was a property that was technically new because it was only sold to those people, only sold to him really, the others had built it. Now, if it had been sold by a developer to them and then to him, it would not have qualified. So it's very tricky. You have to get in the right rules on that, and you have to ask prior to committing so you know whether you're going to get that. So he got to pay even less than the first Nick. He got his extra 10,000 back at settlement and he only had to put in 20,000. So it just goes to show if you've got the right criteria and you know what you're doing, you can get into a property very cheaply. He also managed to revalue his property after 12 months and borrow again at up to 80% and was able to buy an investment property. So Power to them. They're powering on these nicks, but I want you to be able to do the same. Stamp duty. This is the first thing that we want first home buyers naturally to qualify for. The rules are really tricky around this. Some states do, and some states don't give a discount, or their discount rules are very complicated. So here's a slide that can give you a basic overview. Just remember, this webinar is in March 2025. So the information I've got is as up to date as I can today, but never rely on what you've seen a composite like this. Please go to the correct websites for each of the government departments. So in Victoria, you can see up to 600,000 no stamp duty payable, and then there's a sliding scale up to 750. In New South Wales, up to 800, and etc. There's other reduced rates. In Queensland, they've got a new rule that's applying from 1st of May. There'll be nil stamp duty for first-home buyers. In Tasmania, it's only a 50% discount. In ACT, it's the concession, but income assessed, and it's a very complicated system. Goodness knows whoever thought of that. In South Australia, for new homes only do they get a stamp duty exemption. So that makes it really limited if most people are trying to buy an existing property. And in WA, there's rules around it. Some get a concession rather than a complete removal, up to certain levels. So that's the first thing. We're looking for that stamp duty concession. But secondly, most states have some form of cashback rebate by the state governments for new builds. This is only for new builds and generally across the country now. And each state has a different rule. It's all extremely complicated. Again, you can use this as an overview, but I really recommend that you go to the actual government website and get the details from them, because that's where you'll get it from the horse's mouth as such. Okay? So first home buyer grants, I've told you that they're for a new home, but in Victoria, if that property has not been sold in the first 5 years, then you can qualify. But most places need you to buy a new place, and they're quite specific about the criteria. So they're the first two things that we help with first home buyers that you need to know. Now, how do you organise getting these deductions and discounts on stamp duty and first home buyer grants? Your conveyancers help you. And while we can alert the lender then not to take the stamp duty, it is the conveyancer who will direct them what to pay and when to pay it and all that sort of thing. So you make sure you confirm all of this with your conveyancers. First home buyers guarantee. This was a scheme introduced by the federal government during COVID, I believe, where you only have to pay 5% deposit, but not if you've got hundreds of thousands sitting in your bank. This is for people who do not have a lot of savings. And you might go, well, they can't see it. Well, actually they can. Nowadays, under the open banking scheme, the banks can see, and so can the government. So there are lots of rules around this, but here's the main thing. If you don't have your 20% deposit, you will be usually obliged to pay lender's mortgage insurance on your purchase. Each state, there's different rules around how much the property can be worth. So you need to check for individual states, because it's higher in New South Wales and lower in Tasmania, but this applies across the country. 5% deposit is all that is required, and I've given you an example of two fellas who took advantage of it. But you cannot earn more than $125,000 if you're a single, or $200,000 if you're a couple, and it's got to be your first home. And how they check this is by your notice of assessment back from the ATO. But here's the trick with it. Say last year on your taxable income and your tax return, when it came back, your notice of assessment back from the ATO said you earned $100,000. But this year you've got a big increase. You've got a new job, great, big income. You're now on $140,000. You think you might not qualify, but you do still qualify. So the great thing about this is you can use last year's notice of assessment right up until the end of June in this year, 25. So if you earned less last year, but you now are actually applying for a loan with a higher income, you can use your higher income for your loan, but your last year's notice of assessment. So that is an awesome trick. and can help you get into a property for as little as 5%. So not having a big deposit can be fine. A regional first home guarantee is also where the governments will support you. The federal government will support you with low deposits and will fund the lender's mortgage insurance for you, and or family guarantee for single parents or legal guardians who are looking after children and have a very small deposit. The government's helping fund you into these properties. Now, the banks are less keen on the family home guarantee because it's a 2% deposit and they're finding they're defaulting madly. People who have only put in 2% can't prove they can save and they're really struggling. So the banks are loath to do these. So you really need to have a sure income and know what you're doing when you apply with this. Just don't go into it for the sake of it. It's crazy. And if you default, you still default and you'll be in trouble. So do it sensibly, but ask for help. So issues to note include income caps, as I've alerted you to, property value caps, and are you a resident, a permanent resident and a citizen of this country? They often will ask you for your Medicare card to prove that before they will invite you into one of the schemes. So check those out, those requirements, before you go any further. So I hope that overview helps on grants and schemes, because that's great information for people who might not have much a deposit or want to know how much they can get back. So there are three main areas, as we said: stamp duty, maybe first home buyers grants, and the third one is the deposit guarantee. All of those are useful for you. Now, they will be notifying you when you complete and apply for particularly the first home buyers deposit scheme. They will want to know, have you completed your notice of assessment for last year? And in July, coming up in 2025, they will need you to have had your tax done straight away. So I need you to, as soon as it hits the end of June, get in there and fill in that tax return, get your notice of assessment back, and then you can go and apply for the next part of the scheme. And do you have a Medicare card? So this is some of the criteria for you. Okay, area number 2 that we're going to talk about tonight is what to ask your parents, and what parents often ask me. And this is, oh my gosh, what an area of big mystery and mess, I can tell you. So I say, let's give them the money, parents, if you can. It's so much better giving it to them now and helping them with that deposit up front. One of the big problems I find is parents will go, oh, I'll go in on the property with the child and that will mean that I'm protecting them and I'm helping them buy. Well, no, because if you've already bought property, then you ruin all their chances of their first home buyer options. So they don't get a reduction in stamp duty. They don't get access to any of the reduction on the lender's mortgage insurance. So really, you're not as helpful as you think you are. And the other thing, no, you cannot offer a guarantee for income. Parents often think, well, I'll just guarantee the income and then the child can buy whatever they like. It doesn't work that way anymore. This used to be a thing about 20 years ago. It's no longer a thing. Banks have found that people who were guaranteeing income on properties ended up having issues and often losing their own house or whatever. So this is no longer an option unless you're on the title. They really want you committed to the purchase. And so it just ruins it and makes a mess of it both ways. Children are better off buying their own, taking advantage of all the first home buyer options and getting into the property market that way, if to be fair. And you can borrow from your own property and give them cash out of it if you can, but rather than mess it up and do it together, it can be problematic. And one of the big concerns I get often asked is, how do you protect my child from, they've got a potential partner and I don't want to give them money if they're going to lose it to their partner? Well, unfortunately, it's two different things. So they have to organise their own prenup agreements. But if they've been together, often you need to see a solicitor about this, but if they've been together for a couple of years, it's pretty well guaranteed they can have a go at one another on the property. So be careful about what you're doing there. I can't give you legal advice on that, but do go and speak to someone. It is important. But what you can do and how best to help is give them a non-refundable gift any day. that is an awesome help for people. When they get a gift and not have to be obliged to pay it back, it's easy for them to use. The banks are fine with it, doesn't matter how much it is, and works really well. And I had some lovely clients come to me one Easter and said, oh, we haven't got much of a deposit. I said, well, go home at Easter and see anyone in the family who can give you some money. And sure enough, they came back with many, many thousands, because a grandfather used to store money in glass jars in the backyard, can you believe? But anyway, another thing that parents can do is offer a property to help with the security. So if you want to get a bigger loan and you don't have enough security, you can potentially use a parent's property or a sister's or family members anyway, and you can secure the loan against both properties, and that way you can borrow more. So if you've got a good income, that makes it much easier for you. If you want to talk about property guarantees, the parent is giving a guarantee on only the property, not the income. So they're not guaranteeing to pay the loan, but what will happen is the bank will give them first right of refusal to pay the loan should the child default. Otherwise, they will have permission to sell the property, and whatever debt is left, then you could be stuck with that. So it's still a big obligation, but worth having a look at, because most we can manage to remove the guarantee within 12 months to 2 years if the child is working to pay that down quickly, and hopefully we get some uplift in value. So usually we can do that quite quickly, so it's good. Deposits. A deposit can be a gift, as I mentioned before. Even your rental history, if you have a history renting, and then you're given a gift, we can go and use that to prove that you are capable of paying a loan. So that's great. The only issue where that doesn't work is when you're using the first home buyers deposit scheme, because you need genuine 5% savings. So that is a federal government mandatory requirement. It's not the lenders. And if you use a guarantee property, then that can be covering the deposit in effect. So what is 5% genuine savings? Well, it means the cash has been in your bank for 3 months and it's been growing. So that deposit, that 5%, say it's a $600,000 property, it's $30,000, it's in your bank account and it's growing up to that level, and it's $30,000 by the time we go. Now, where the nexus can be broken is I've had a client who actually had her deposit in her account, lent the money to a sister, 15,000 out, and when it came back in dribs and drabs. So 9,000 here, 4,000, a couple of more. And the bank said, well, it's no longer considered genuine savings because it wasn't. If it had gone out in one lump and come back in as one lump, then they would accept it. But because it was not this way, it caused problems. So to know what is genuine savings, you really need to be saving in, and preferably call this account your house deposit account. That can be really good, and make it really clear. So the money goes into that account and doesn't come out until we actually buy. So really, really important tip. And people go, oh, I need a credit card to prove my credit worthiness. No, you don't. All you need to be able to do is show that you can save. The bank will be quite happy if you've got savings in your account because they can see it all on open banking now. So now we're on to frequent mistakes made by first home buyers. One of the big mistakes I find is that people buying off the plan. That can be a real problem. Buying off the plan, it causes multitudinous problems, but I like to reference it like a car being driven off the car lot. What happens is the minute you drive it off the lot, it goes down in price, and that more often than not happens when people buy an apartment off the plan. A client spoke to me today. He said, isn't it extraordinary? I've had this apartment that he'd bought, his first home, back 10 years ago, and it still hasn't grown in Richmond. 10 years and it still hasn't grown. So he says he's not even sure it's still worth what he paid. So that should tell you you've got to be very careful about what you're buying and make sure you're buying something that's a little unique or that you're buying at the bottom. So be careful also that you're not paying too much for something. Yes, they can go down. I had a client who had an apartment in South Yarra or somewhere like that, and they ended up with a $10,000 bill each for the apartment block. due to the balconies all having problems and they all having to be worked on and replaced, which is just dreadful. So you don't want that sort of thing happening. Going unconditional when you're not ready. So if you haven't got a pre-approval, that can cause you issues. Please get your pre-approval and know the limits around that. When you get a pre-approval, it is not guaranteeing that purchase of that property, your new property, because they don't know which part of property you're trying to buy. It's really important that you get the property checked with your mortgage broker when you actually go to buy, so that we can be sure that you can go unconditional and we'll get a valuation at the purchase price as soon as we can. And the final thing is not getting building and pest report. So one of our young clients went to an auction on the weekend and he had actually had his building inspection done. And this place was full of termites. And although it still looked cheap, plenty of people at the auction had not had theirs done. And while he recognised that they purchased the property maybe 50 grand cheaper than would be on a normal market in that area, he was a tradie, he can tell, and from his inspection that he'd found that there would at least be $150,000 worth of work that needed to be done to bring this up to livable standard. Worth noting, always get a building and pest inspection. Now, this can be problematic if you're going to buy at auction and are expected to pay one every time, but be careful, buyer beware. You need to know what you're getting into. So be very careful about what you're buying. I've had clients buy a property that was brand new and no insulation, even though it had a 5-star energy rating. I said, get a building inspection done. You just don't know. And sure enough, no insulation in the roof. They'd actually recorded that it had. The surveyor had said yes, but this was not to be the case. So you just don't know what you're getting. So always get an independent assessor. And my building inspector that we recommend, he has occasionally told clients not to buy a certain property due to problems with the building that he's identified. Doesn't happen often, but just occasionally. So it's worth knowing you don't want to be buying that dud and then end up with all those issues. So be careful on that one. So where is property going now? Well, next month, we're actually talking about this with John Lindeman, who's got some really good news for you from the Lindeman property reports that he does. And he's also got some fabulous data on why most times property does not double every 10 years, which people tell you it will, so that's fine. He's done data for over 100 years. Fascinating information from John. He's talking to us in April. Make sure you're there. Check our website out, propertyed.com.au. We have a lot of calculators and other things to help you, so make sure you have a look at that and you can use them. Note, you can call us anytime. We'd love to help you further. Thank you for watching.